I see AI as a new sort of Cold War, right? Like we've got this war that is against the US and China, a little bit in Europe. They all trying to build robots, AI, automation as quick as they can. They pouring tons and tons of money building data centers, releasing all these models, la la la. I don't feel like that has reached an end, but I feel like the innovation is sort of plateaued for a bit.
Mm.
Do you think that's the end of the bubble, or do you think we're just in the middle of the journey? Welcome everyone to another episode of Lunch Tech and Chat. I've got my friend Will here once again, as usual. We've been talking about bringing some people for interviews, but sorry for everyone that has been emailing us. Our lives have been a bit crazy, but we will get to you. We'll organize something. We'll get there. We'll get there.
Yeah, we'll get there. So for everybody that is been emailing us, I'll put the blame is all on me. Andre has nothing to do with it. Andre is the one that is always sending me, hey, there is someone else that actually reached out to us. And so I'll be fully honest. It's if you have someone to shout at, actually send the email to, hey Will, can you get me those dates? It's full on me.
Yeah. The other thing to organize is time zones and all those complexities. But yeah, keep reaching out. And when we can, we will reach back and we'll start bringing some interesting people for us to talk to. Well, what has been happening the last few days in AI is just the exponential sort of evolvement of image models, LLMs. So GPT 5.1 has been released, which is like, let's say, the next level of GPT 5. It's faster. It's like the reasoning efforts. When it's reasoning, when it's thinking, is faster. The model is faster. Is it actually better? Um, yeah, there's less jargons, fewer like undefined terms, it's clear. But I wouldn't say like you can now select how you want it to reply to you. So there's a few more features.
Yeah.
It's interesting, but I wouldn't say, oh yeah, what a revolution. No, it hasn't been a revolution. I also saw that there was a leakage of a new image model from Google that some people got access without any of the blockages and they were able to generate a lot of crazy images. So yeah, I feel like LLMs models, of course they're getting better, but it's just becoming a new commodity, right?
Yeah, yeah. It looks like. I mean, but we did have like some discussions around this in the past where, um, the difference between 3 and 3.5 was also like not a huge difference, and then you have like some leg ups. I think we're probably like in that phase where you have a big evolution, either a model reduction of like in the past, like reduce hallucinations, improve its math scoring and etc. And then we achieve a new plateau, and then the data and all the things that actually can be fed into it, because a lot of it is synthetic anyway, so it's not gonna necessarily improve a lot the quality of the model. And we probably are in that period of like, in between transitions where the model is better and has got some minor tweaks and adjustments to it, but there is not like revolutionarily better. It's a little bit faster. But it's not necessarily a matter of the model itself. It's more like a matter of the engineering computation running behind the model that maybe is a little bit more efficient, etc. Right? So it's maybe one of those moments. I mean,
Yeah.
I think that's part of like the overall cycle of innovation. Innovation always happens in big legs. Innovation happens sometimes in a big leg, and then there's weeks that engineers and product owners do over time, and that's still innovation, improvements, optimizations, and then there's another leg up as they start kind of like tweaking that. I
Yeah. It's
think
interesting
it's pretty like
because
natural cycle.
yeah, Sam Altman has been talking about GPT 6 is coming.
Yeah.
And then I know that there was the Chinese model Kimi, which is like a open source. They had a new version of it. The new open source version, it runs as well as GPT-5, but you need less hardware to run. So hardware dependencies are decreasing for the thinking models. And yeah, it's just like I feel like GPT 5.1 came out because Kimi came out. And I don't know, like I just feel like it's starting until something major comes along again, and not diminishing because the change's still happening, but it's reaching a plateau in a way. Like I don't think like now if you say, "Oh, I'm using Anthropic, I'm using OpenAI, or I'm using Google," you're gonna have a massive difference.
Yeah.
I do see. I saw like interesting thing to say. I don't know if I mentioned that in the last podcast, but I saw these guys that they were training different models for stock trading, and then
Mm.
the Grok was the best one on trading. And I think that's more because it consumes data from Twitter or X, and then it has more like sort of the sentiment. But yeah, some models are better than others in one thing or the other, but it's sort of reaching a little bit of a plateau. I think the time now, like the biggest conversations now are around, the agents, which it's a old topic. Like I know old for AI, but technology wouldn't be that old, but it's old. Everyone, the buzz around agents has sort of died off a little bit. I know OpenAI created the new framework, and there's all the frameworks up there. I see more companies starting talking about AI, so it's becoming more mainstream. People are understanding the reasons on the implementation. So yeah, I just feel like that
But it's
beginning of the wave of the early adopters is coming to an end and is becoming like a new normal, like a new, like
it's it's the
mainstream.
same. It's pretty standard, right? As well, like in terms of like at the very beginning, there's all of the exciting about these, new test box proofs of concepts, yeah, innovations, pilots that actually people run, and then eventually things coalesce around a few. That's, I guess, pretty natural standard of like developments of technology, and then people talk about it. Like I guess the business folks actually talk about by that point in time. The technologists, like 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 yourself already said, like, oh, this is not novel anymore. It wasn't because people that were building with it, they might be building already for a certain length of time, but for the for the marketing folks and the multi-level marketing folks and the BD commercial people, they're starting to kind of grapple into some terms that are beyond technology jargon and actually kind of more like related to some business use case that they are solving. And at that point in time, I guess the technologies kind of like tend to become like, ah, this is much less interesting because it is from their point of view, it is like the frameworks and things like that have already kind of like commoditized as you're saying before. But from the for the marketing crowd, um, that that is novel. That is actually now they understand what is it that we're doing, kind of thing. You know, and up to that point, it was just the developers and the innovators that actually understood, but actually the marketing crowd didn't have enough of kind of almost like that middleware of translation between what is it
Yeah,
that actually
I
got
I get
doing
what
and
you're
what
saying. Like I
you
feel
know.
it's so normal now. Like I'm building agents all the time. I've got a bunch of agents that do stuff for me. I know what works, what doesn't. Like it's just I don't know, like I feel like I'm expecting a new hype or something else to come out of AI. But yeah, I think we're just in a little bit of a plateau on the technology. Like yeah, we'll see what will come out of this. The interesting thing is, so looking into, how we spoke about in the other episode, that big sort of what's the word that we were using, like the money
the
going
the
around all
the
companies.
the money glitch or the money circle,
Yeah, the
yeah.
money glitch. So it's interesting that Michael Burrows, I think is his name, the guy from The Big Short, he he has bet a lot of money against Palantir and Nvidia, like saying that they really overevaluated, that it's gonna crash. There's a AI bubble. He sort of disappeared from the media a little bit. Like he did a last post saying like, when you see a bubble bursting, you see a bubble. I can't remember what he said, but he said something in the lines like, you see it, it's just coming. Like you just need to open your eyes, something in lines of that. And then he's betting a lot of money. I think like in the timeline of 2027 or something like that, and that's his next big game. So, and I saw like Warren Buffett's like taking money from the stock market, and everyone talking about this AI bubble. And what's your sense and feeling on that? And the reason I ask, and let me just complete. The reason I'm asking is Trump and the U.S. government. Like I see AI as a new sort of cold war, right? Like we've got this war that is against the US and China, a little bit in Europe. They all trying to build robots, AI, automation as quick as they can. They pouring tons and tons of money, building data centers, releasing all these models, la la la. I don't feel like that has reached an end, but I feel like the innovation sort of plateaued for a bit. Do you think that's the end of the bubble, or do you think we're just in the middle of the journey? Like, what do you see? It is a industrial revolution for sure. It's gonna change the way the world works. But in a stock market perspective, what do you see?
Okay, so there's quite a bit actually to unpick in your question. So there is the part that is about the markets and the, I guess, the efficiency of the markets, and then there is the underlying, I guess, geopolitics of it all, right? I think those are quite two distinct. They kind of like they overlap in some aspects, and they are distinct in other aspects. So I try to unpick a little bit them. So I just heard this week like a very very knowledgeable interview by another podcast called the Master Investor. Um, the Master Investor podcast, which interviewed Mike Lewis, and he's a chief investment officer at I believe it's, if I'm not mistaken, Morgan Stanley. Morgan Stanley, of course, has a big asset management business within them, can manage portfolios both on the equity as well as actually fixed income. Asset universe, he's quite focused on actually of course the equity side of things. He did mention something that I found very very interesting: the analogy between some of the, I guess, common asset managers of every day and players like Warren Buffett, right? They, even though Warren Buffett probably has been, if not the most, but one of the most actually long-term successful investors across the space, there's one thing that he has that most asset managers across the globe don't. And that thing that he has that others don't is time. I mean, it's kind of like of find a way of
You
saying
can
for
say that
someone
he's
that
got time, that
100
he's
years,
like
some
99 years old or whatever.
yeah, yeah, someone that is almost 100 years old, but so it's kind of a funny way of saying that. But what he actually implied by saying like everyday asset managers do not have that feature that Warren Buffett actually has, which is time. That actually Warren Buffett has his strategies, and he doesn't necessarily have that pressure from um, investment allocators or like, if you are interacting with an asset manager, you want to be in the markets, you want to be allocating in the market, you want
You
your
want to
money
see
to work,
results
you
quick
want
and
your
fast.
exactly your money to be working for you. The traditional asset managers, they have to be in that game because they cannot say like, hey, I've parked your money here, like Warren Buffett actually has done actually several times. I've parked your money here short-term fixed income assets, bonds, etc. And I parked it for like 5 years before actually I have an actual super green shoot that I can go and actually deploy because the market is in a perfect state. Most asset managers don't have that privilege. If they do that to their investors' money, the investors will look another asset manager actually to park their money into. So, and that's like, I guess, a key difference here in the market. So most of the more traditional kind of asset managers like JP Morgan Asset Management, like, Morgan Stanley, Goldman Sachs, etc., they have to be inside the market. They have to be invested. And therefore, they have to be invested in sometimes they have to be making bets into some of these underlying investment narratives like, AI computing, quantum computing, and the like. And because they are invested, they also need to be managing risk in those investments, and sometimes making good or bad calls on like, we are at the top of the cycle, we got to actually reduce that our exposure to it, or are we getting to the top of the cycle? And all of those different investors, they have to be taking that, the frameworks and the risk management view that they have to be able to do. The vast majority of them, they are not like Warren Buffett, that actually is just a value investor, is just waiting for the bloodbath to happen in the market and then taking on what is now a cash pile of $350 billion approaching in cash and then deploying at that point in time. Right? They don't have that privilege of doing that with the investors. Warren Buffett has, because he's mostly now playing with his own money. He doesn't have to have that inflow of money coming to him. If he was in the same game as all of these other asset managers.
Yeah, and it's interesting. Even MicroStrategy was the biggest investor in Bitcoins. Like they moved into a BI company to a Bitcoin investor company. Like it's so interesting how some of those market movements are happening. But just going back to my old question,
Yeah.
do you
It,
feel like we are in a bubble of AI that is about to burst? Because it has dropped like maybe around, I don't know how many points, but yeah, it has dropped a few points in the last few days. Like the market was really high. There was a big of a drop that has just recently happened. If it's just normal and it's gonna recover because Trump US is all backing all the AI shit, or do you think it's time that yeah there will be a big correction? Like
I,
what are you seeing?
I think this conversation that I heard, and then actually I went on to look a little bit more into the data from Mike Wilson, was also interesting in that aspect. So essentially, from his perspective and the perspective of the investments that they are doing at Morgan Stanley, the the market went into effectively like 3 or 4 cycles over the last kind of like post-COVID period. Already kind of like was quite relatively fast cycles, and what up until recently was only I guess, Mag 7 and top stocks driving all aspects of the market, has started in the beginning in earlier parts of the years. I think it was around April or May. It started to broaden out a little bit. Where that has been seen in the equity side is what we call like the Russell 2000. Index, which is one of the most broad-based indexes. Like most people talk about the S&P 500 and the Nasdaq, but they only represent a subset of the investable universe. Whereas actually the Russell indexes and the Russell 3000 actually is a much more broad-based, because it actually encompasses as well SMEs and mid-tier companies. And that part of the index is starting to show green shoots. Effectively, what it means is that actually some aspects of like the AI development is starting to be embedded and adopted across these SMEs, and they're starting to see a performance in terms of earnings in a reduction in costs on their side that allowed them to start performing even sometimes better than the top large companies that everybody talks about. So those green shoots are actually appearing a little bit more broad-based. So would that continue if some of the top names that we always talk about, NVIDIA, etc., did significantly correct? It's probably a question. I think this is a legitimate question, but that depends on what is the underlying um, performance that is driving some of those mid-tier companies, right? Is that performance completely independent on whether NVIDIA does another deal with OpenAI? Because actually, what is making those companies actually look good is the fact that they are now have actual implemented kind of like frameworks leveraging AI and creating greater output for their customers at a lower cost basis, which drives price to earnings ratio, or or is just based on speculation of what they are actually investing themselves, their treasury. If it's the first, if it's the fact that actually it's becoming a broad-based implementation and they're starting to see return on that capex that they are developing, then it might be something different, even independently whether Nvidia and other parts of the market actually were to underperform. Those mid-tier companies could still actually be doing well, right? So I think it's just that we don't talk about them enough. But as an investor, you kind of have to be curious, have to be inquisitive, and you have to be looking at all of those things, not only the headlines of what did NVIDIA and OpenAI, etc., actually done, but what about, I guess, performing stock picks almost in areas of the market that are a little bit less looked, and then see whether the patterns that are developing around those areas of the market, they actually are sustainable patterns and not just a speculative activity.
So in summary, do
In
you think
summary, in
do you
summary, in
think
summary,
Nvidia
when you have like a
Nvidia
broad
and Palantir are gonna have a crash?
base, so if the reason why they are growing the market is because of some of the money glitches, the glitches that we've been talking about. Mm, There is there is a possibility of some correction there, right? Because if all that you can do is just flipping money from one side to the other, and that doesn't necessarily mean that there is, I guess, a
Real
growing
profit.
a growing demand at the same pace of all of that money circulating, that there could be a correction, but I wouldn't necessarily say, oh, this is a 50% correction or whatnot, depending on how much they are leveraging on that, because that's effectively what it is. It's kind of like a leveraging looping activity. But that doesn't necessarily mean broad-based correction across the whole market, even though a lot of those
Yeah,
max
yeah,
haven't
I'm just talking about
drive,
these two, like AI sort
but
of.
it could, yeah. I mean, that happens in an extent. Sometimes it's actually healthy, right? Because sometimes corrections they clean up a little bit the market. They clean up a little bit the market. They clean up a bit of the excesses of the market, and then when you start back again, you start from I guess, from a point that is maybe a little bit more healthy. Um, and maybe that's what we might see here.
Interesting. Really
Yeah,
interesting.
yeah.
And the other thing that I was thinking of is like, as we think of AI and blockchain, sort of like a new, let's say, Cold War in a way, I feel like Trump has taken the right strategy of betting on AI and betting on sort of crypto, like US dollar being the main sort of, you know, asset for crypto generation. What's your take on that? Like, because if we think about the current economy, right? So the current economy, you need to stake things using US dollar. That's how US maintains its sort of global power. And it's sort of naturally not forced doing that in blockchain as well. That's what I've been seeing happening more and more. Is that your view as well, or do you think that crypto is going to be a revolution like we used to think in the beginning of Bitcoin and some of the crypto assets?
Um, no, I think so. On that specific aspect, right? So I think the Trump administration is, I guess, resetting the balance of power in maybe in a way that kind of like was required. Again, like removing all the things that I might be thinking, that I might think, or anybody actually might think about Trump and his, I guess, personality and his personal kind of like involvement. I think from a trade and geopolitical perspective, he's actually setting some boundaries. It's like, this is it, guys. It's
Not that
you've
we
got
agree with everything, but he
not
is.
not yeah, but he is. At least you know what are the where the red line crosses, and where you're allowed to cross the red lines and where you're not. And I think from that perspective, maybe there's a part of me that over time, and I don't agree with a lot of stuff that he does, but actually over time, there's a part of me that actually says maybe we needed that behavior of saying like, you know, the West in a way kind of has been um, for a few decades now, kind of becoming this thing that doesn't know exactly where it's floating, a little bit adrift, and the rest of the world kind of like going on and moving on and sticking to their values and to their powers. And the West is kind of like this adrift thing that nobody really knows what it is. And I think him coming on and saying like, this is what we are, and these are some of the red boundaries. I don't think it's a negative thing, to be honest. I think it's good to set some of those boundaries. In terms of like the evolution of that into the blockchain, I think is being quite maverick, right? In the sense that it's being saying that there is, on the traditional financial markets, there are areas of the market where people are kind of saying like, I'm not quite sure about this long-term financial situation, fiscal situation of the US, and I want out. I want to find different strategies, different exit strategies for it. Be it bilateral um, trading flows and trade activities happening between countries, like the BRICS. I mean, in the past, and then all the different like regional agreements happening where people can say like, oh, we set up actually this is our settlement. It's not necessarily the US dollar, etc. And I think his administration has been a bit of a maverick to say, if we can uplift from a technology standpoint ourselves and making all of that instant settlement, reduce counterparty risk, etc., like through blockchain rails, and then re-attract and reignite all of that flow of capital with a US dollar centric view, then we kind of have a chance of actually disrupting a little bit that movement of away the US dollar
Yeah, keep controlling the money.
back into the US dollar, kind of like rail kind of thing. And I think that's where the maverick is of
Because
this.
if they lose that, that would be a really big problem for the US. How would they maintain their debt if they
They
don't own the money globally, right? Like,
100%, they were, and they still are to an extent, because I mean we're still talking about a market that is not at the same level as even like Swift, right? Like it's not yet there. But in
but
terms of like,
it's a long game bet.
but it's a long game bet, because like if if you put into in financial and geopolitical contexts, is like Swift, for example, is the thing that in the payment network, in the networks of payment around the world, generally speaking, they have been quite US and European centric, right? It's coordinated by all of financial situation, like the financial supranational financial organizations are US and European centric, like be it the Bank of International Settlements or SWIFT as actually a transmission mechanism around the world. They are Western, right? They are Western dominated, right? And we've had over the last 10 to 20 years a shift, especially because of the power of sanctions actually happening around the world, a shift around trying, like other countries and other blocs, trying to find ways of getting away from that, because they knew that the moment that actually they, let's say, fucked it up a little bit, they would be in a sanctions list, and that would be under power of uh, uh, America, and then European kind of organizations. So the Maverick thing is saying, okay, we are losing some of that, I guess, almost like an enforcement power through our payments networks around the globe and the channels of money. So let's upgrade this here with a new technology that is superior in the sense that it, as I was saying, like, instant settlement, reduced counterparty risk, etc., and that flows around the world, but is back again, it's US centric, right? And then people will adopt it because it's superior
Yeah.
to what we had. And that's the Maverick thing. And that's working. I think that bet is, so far we have a few elements that Maverick is actually quite.
Yeah, I think like let's say for world domination, there are a few pillars. There's the economic pillar, there's probably the power pillar, there's the influence pillar, and the US has been losing a lot of those pillars or losing control a lot of those pillars. And I feel like on the sort of information and finance, where they betting like on blockchain and AI, that's the way to regain some of that power. Now, in parallel, they're working with the sort of military power to show the military power again. So it's like trying, like I feel like we had the US sort of dominating the world. I'll use this word dominating, but you know what I mean, dominating the world for many years. They had all the pillars, they controlled the money, they controlled the narrative, the communication, everything. And they started losing a lot of the space, like even on the manufacturing space, it's to China, technology to China, and people sort of talking about, different ways of transacting money. So I think that's like a pivot point where the US or the Western world, but I'll say the US is sort of freaking out, trying to regain some of those powers that they haven't really put a lot of attention for a while. But it feels a bit too late. So they needing to be tragic or how they doing this. If they gonna win this or not, it's a big question because now we've got like superpowers like China, right? But yeah, I see. It's a moment of freak out and we need to do something about it. And like you said, trying to reset what the model is to try to rebalance and maintain its place in the geopolitical space, right?
Yeah, I think it's geopolitical, capital markets, and others. And we were just talking about it just before starting the podcast today. I've found myself over the last couple of weeks, because I'm trying to grasp really where we are, like, and whether there's actually patterns in history that we can look into it to understand, I think, the world, because I think it's really hard if you just follow the day-to-day thread of things. Is really hard. I found myself saying, like, I'm almost like losing my brain in terms of like understanding things. Despite all of the information that we have, I actually found myself in that situation. And I start actually, looking again at some conversations that were happening into the early 2000s, like, debates, etc. And at that point in time, of course, China and the US were not in this power competition that they are today. But there was some, initial conversations already happening at that point in time. And I found myself as well, reading some books of right after the fall of the Berlin Wall as well. And what is it actually that people at that point in time, the likes of, people that really think deep and hard about things, like, Henry Kissinger, that has passed away recently, a few of the top people that used to write about like foreign policy, like Samuel Huntington, that actually wrote a beautiful book, and I recommend to everybody actually to read, to try to understand the world today, called The Clash of Civilizations. And these people back at that point in time, just in the 90s, what they were trying to say, what happens to the world now that the Berlin Wall has fell? Russia has given away its, given up on its
Power.
ideology of that the Soviet Union was driving. What happens then? Those people were thinking about that point in time, and there were actually different currents, and you can see how which ones actually were right and which one was wrong now when you look into 3 decades into the
It's
future.
easy. It's easy to look at the past, right?
Yeah, of course. But at that point in time, there were some people actually that had pretty good insights of what actually might happen. It's interesting to read at them today. It's There was actually a big current, and I think that's the current that most of us actually assumed is that it was the current of Fukuyama, which was a guy that has written about the end of history at that point in time, and he said like, that's it, the West has won, right? That was the assumption, and that was the assumption that we is, stuck to for 2 decades after that, the 90s and the 2000s. Up until the 2010s when there was a bit of a revelation, but actually for 2 decades we stuck with that saying, that's it, the West has won. There's no more kind of fight for duopoly between the ideologies of capitalism and socialism, and the West has won. We all know that that's not how things have turned out, right? And we all know now, but at that point in time, there were actually people that were they're like, well, not quite sure. That's how things are going to turn up. And anyways, this is probably a full topic for a conversation, but it's
Maybe it's the
really
next
interesting.
podcast if we remember that
It's
conversation.
is the next conversation, but then we can mix actual elements of, I guess, economics and geopolitics in all of that, because it goes all around.
Cool. Thank you very much. Well, I do need to go. Thank you for your time once again. Thanks everyone to be listening to us. And if you have listened to the podcast till the end, what should they put in the comments, Will?
Let's say future civilization.
For civilization. All right. See you, Will. Thank you very much. See you
Thank
next
you.
time.